I'm Brett Sheedy. I'm a CPA and tax attorney with Strategic Tax and Accounting. Welcome to our knowledge sharing videos. In these videos, we'll cover some of our most commonly asked questions about how to reduce taxes, business law, and business consulting. In this video, I'm going to talk about whether you should use an S election to be taxed as an S corporation for your LLC. So the first step is to talk about whether your business type and entity is correct to be an S corp, taxed as an S corporation. So the first question I get a lot is, well, I have an LLC, or you set me up an LLC. Now you're talking about an S corporation. I don't understand. You said I was an LLC. Well, an LLC can be the base entity for an S corporation. S corporation is not an entity you can set up at the county courthouse or the Secretary of State's website. It is a tax election. It's a federal tax election. So you make that election by simply filing a Form 2553 with the IRS, just two-page piece of paper, and it can be made for a corporation or an LLC. I choose an LLC as the base entity because it's much more flexible and it doesn't have annual corporate formalities. Flexible in that you can drop the S election and become a single member LLC again that doesn't have to file a separate tax return if your business ever shrinks or changes. So yes, as an LLC, you can make an S election and be taxed as an S corporation. Now, would it be beneficial for your business? Well, the taxes we're lowering with the S election are the Medicare and Social Security taxes, the employment taxes. So that works well for 1099 income, let's say for realtors, insurance sales, all kinds of 1099 contractors, anyone who gets a 1099 NEC or a 1099K for processing their own payments for the sale of services or goods. That's the appropriate type because it'll lower the employment tax. If you're doing that on a Schedule C, you're paying employment tax on all the income. You can't choose some as compensation and some as profit to pay tax on it as K1 income. So that's going to be a little confusing to describe K1 and compensation and real estate tax, but just for the purposes of this presentation, remember, if it's for services or goods sales or 1099 NEC income, an S election would save you money. So for an example of when it's not appropriate for rental of real estate that you own, real estate rental activities are not subject to employment taxes, and therefore you wouldn't want to make an S election. And you don't really want to own real estate under S Corp status unless you're a property developer and going to pay employment taxes on that ownership and sale. Okay, so once you've determined that you can elect S status and that you would have lower taxes from electing S status, how do you make that election? Well, first you have to have an entity, so you can't make one for yourself and your Social Security number. You're going to have to establish some type of entity. As I stated earlier, I always use an LLC as my base entity because it's more user-friendly and flexible. You then, with the EIN and name of the company, file a Form 2553 with the IRS. I generally file them by fax, and so I can have a fax confirmation showing what I filed and when. And then you're going to have to open a bank account in the LLC and EIN's name. So you have to actually do business under that company. You can't just have it sitting there, but continue using your Social Security bank account, base bank account, or your merchant services that's processing under your Social Security number. So that does mean you're going to have to open a bank account, and anyone you use to process debit or credit card payments or who sends you a 1099, you will have to change your W-4 with them to show them who they're paying and their tax ID number to be your business and its EIN as opposed to you and your Social Security number. That's a very important step. You must actually have the income directed towards this EIN and business name for you to be able to use the S election and S corporation. You're also going to have to then file a annual Form 1120-S income tax return by March 15th of each year for this entity. Okay, so what's the burdens of using an LLC with an S election? Well, you're going to have to create the entity. At a minimum, it's going to cost you $236. If that is, if you don't have an existing one. If you have an existing one, we can just make an S election for it. If you don't have one, you'll have to create one, and that'll cost $236 to Alabama. If you use an attorney or an online filer, it's probably going to cost you another $500. You're going to have to get a new bank account and have any sources of income or revenue directed towards the EIN and LLC name instead of you and your social security number. It's a little bit of a hassle, but I think it's worth the money savings for the right set of circumstances. You have to file a separate tax return. That's going to probably cost you between $500 and $1,000 a year, more than what you have been paying for your tax return. And you will be investing less with the Social Security Administration. Some people would see that as a benefit, actually, and not a burden. But the reality is, you're not going to be adding to your benefit. Social Security benefit, even though you get the same amount from the time you retire till you die, is not free. It's a pension that you've paid money into forcibly through these tax withholdings called employment taxes. So you're no longer going to be investing more money with Social Security, so your benefit amount is not going to climb as much if you didn't pay yourself any compensation. We're going to talk about that in a minute. You will actually be putting into Social Security, but less by using an S corporation. Okay, so moving on to the advantages of using an S corporation. It's going to pay significantly less tax for the income from that activity, up to 10% of taxable income. So, for example, if you make $50,000 in taxable income from that business, you should be paying about $5,000 less in tax. $100,000, you'll be paying $10,000 less in tax. So it is substantial. It's worth, if you're making $50,000 to $100,000 a year from this business, obviously it's worth $500 to set up an entity and $1,000 a year a tax return. People would trade $1,000 to $1,500 for $5,000 to $10,000 every day. And we talked earlier about you're putting less into Social Security, but you can turn around and take that money and put it into your own IRA or 401k under this business or your name. And so you can still be investing for retirement, but in your own accounts that you control as opposed to Social Security. Okay, so what are some myths about using an LLC with an S election to reduce your tax? Well, there's a lot of older CPAs who are scared of S corporations, and they would tell you that you're increasing your chances of getting audited. But that has not been true for a long time. In fact, it decreases your chances of getting audited. Over the past decade, taxpayers with up to $200,000 of business income that they've been listing on their Form 1040 and Schedule C have about a 1% audit risk, whereas S corps with the same income face about a 0.42% audit risk. So less than half of the chance of getting audited using an S corp than you are just being an individual and putting it on your Schedule C. Also, there's a myth that you have to do payroll to use an S corp, and that sounds complicated and expensive. Well, that's also false. You do have to pay yourself reasonable compensation for your own services to your business, but you don't need to do that through payroll and in order to pay some payroll tax and claim compensation. So that's two myths that have been spread around that make people fearful about making an S election. But as you can see, those myths are not actually true. Okay. So there's also stages of using an LLC with an S election to reduce your tax. So initially we wouldn't use payroll. We would just estimate some management or other earnings you had for your own S corporation, and then 1099 you to your Schedule C. And our whole goal is simply this tax savings of about $5,000 on $50,000. You do need to have stability of income to do this, so you don't want to do it in 1 year with a new business if you don't think it's going to continue to do well. And so we would start out with not doing payroll and maybe making some IRA contributions under your Social Security name. And we determine all this after the fact while we're doing the tax return. There's no advanced payroll, advanced paying in retirement. Nothing's required to be done in advance. It can all be done while we do the tax return. But as income and stability increase, the payroll should be established, and you can use it to make higher simple IRA or 401k contributions and prepay tax. So in the levels of maturity or stability or income, we can modify our actions to take it from very simple and everything can be done in tax season to a little more complicated where there's payroll used and business-owned IRA or 401k accounts. I hope this video was helpful. If you have any questions about it, please call our office and ask to speak to a tax manager or myself as the CPA and tax attorney. Thank you.